There we go. Good evening, everybody. Welcome to the Audit and Risk Committee this evening. There's no members of the public, so I don't need to make the announcement. Just one quick announcement from me before we get started. Please note the following important change to this evening's agenda. Item 4, external audit update from BDO has been withdrawn. BDO will no longer be able to attend the meeting this evening. BDO have recently informed officers that they have received a draft legal opinion concerning the matters that they have been reviewing in relation to our 2020-2021 accounts, specifically issues related to the council's commercial investments. They are currently working on their legal advisors to clarify the contents of this opinion. Given the nature of the legal advice and the complexity of the issues involved, this matter is not currently in a position to be discussed at the meeting. Officers will need time to fully consider the legal implications and BDO's recommendations before the matter can be brought forward to the committee's consideration. Once the process is complete and subject to the appropriate governance arrangements, the item will be scheduled for discussion, potentially at an additional committee meeting later in the year. In light of BDO's absence, Ernst & Young will now attend to present their external audit plan for 2024-25 accounts. As a result, item 8 will be brought forward to, and taken earlier in the agenda. Okay, so we'll get started on item number 1, apologies for absence. So we've had apologies from Councillor Brockman and also apologies from Councillor Palmer, with Councillor Hilliard substituting. Item number 2, declarations of interest. Councillor Headley.
Yeah. I currently chair Audit and Governance at Essex County Council. I noticed there's some of the papers that we're covering tonight include discussions around the pension fund. I'm also on the Essex Pension Board, the investment steering group at County, and if that excludes me from the meeting, I'll leave now.
I'm sure there's plenty more that you can contribute to the meeting besides those, Councillor Headley. Can't get out of it that easily. So any other declarations of interest? No. In that case, we'll move on to the minutes of the previous meeting. All those who were at the previous meeting in favour? That's 2. Any abstentions? That's Councillor Headley. Did you raise your hand?
I can't remember if I was at the meeting.
We'll put you down as approving them. Yeah. Oh, Councillor Davis.
Although I was in attendance at the meeting, as the voting record shows, I'm not mentioned in the attendance at the top of the agenda paper. So, just for correction purposes, that's all. Thank you.
Okay, so, thanks, Councillor Davis. We'll look into that, and Councillor Headley, according to the minutes, you were at the meeting. So, brilliant. In that case, we'll move on. So, as I said, we'll be bringing item number 8 forward so that our colleague from Ernst & Young can get away early. So, we'll start with item number 8, which will be. Yeah. So, would the officers want to start?
I was just going to introduce Debbie Hanson from Ernst & Young. She'll be the lead for the audit here for the forthcoming year. I'll hand over to you, Debbie.
Thank you. Switch my mic so we know it's me. Thank you very much. So this is our audit plan for 24-25. As noted on the cover report, it is a provisional audit plan, and I'll explain why that is. Officers have prepared, I would say, a very comprehensive and accurate cover report to the plan, so I would like to thank them for that. I'll take the report as read, but there's just a few things I'd like to take you through and highlight in particular, and also give you a little bit of background context, which is in the cover report, but I think it's just helpful because we are still in very unusual times in local government, and so I think just to sort of clarify the position would be helpful. So in terms of EY, were appointed as your auditors from 23-24. We haven't actually been able to come back and report to you in relation to 23-24, either in terms of accounts work or value for money, and that's because, as this committee is very well aware, BDO are still completing their audit procedures in relation to value for money in particular. We therefore won't be undertaking any audit procedures in relation to the financial statements for 23-24, but we have done some value for money work, and we haven't yet reported that because we need to await the conclusion of BDO work before we can decide whether there's any additional issues we need to consider as part of that work. In terms of the rebuild, so again, in both our report and the cover report, we focus on the fact that we are in a three-stage process at the moment. So the first stage of that is I'll get to the right page, my computer just closed down on me. The first one is reset, which is what we're in at the moment, which is where the backstop dates have been put in place. Obviously, there was a number of backstop dates. The one that we're working to now for the 24-25 accounts is the end of February 26. There's then the recovery phase, and then there's the reform phase. I'll talk a little bit about recovery as well, just before I move on to take you through the plan. So in terms of where we are at the moment for 24-25, will be this plan sets out our risks that we identified at the moment. Again, we will need to revisit that plan once BDO have reported, and also once we've received some additional information in relation to the group position, so that we can conclude our group scoping, and I'll expand on that a little further. That means that for 24-25, we will again be issuing a disclaimed opinion, as you will have received for the prior years, 23-24 and the BDO years. It takes some time to rebuild assurance from disclaimed audits, and that's because we don't have assurance over the opening balances or comparators in the financial statements, and because in particular for Basildon you've had a very long gap of having no audits. It means we've got a bigger gap in terms of building up some assurances, particularly around balances such as reserves, which are driven very much by the income and expenditure movements and also PPE movements in each individual year. We therefore expect that the first time we'll move to a kind of non-disclaimed opinion is likely to be 26-27, when we hope to be able to issue an opinion which is modified on an except for basis. So that will say we have assurance over the accounts other than some specified balances. And then the likely time frame for an unmodified opinion would be 27-28. And that's in line with guidance that has been issued by the FIC, which is publicly available, which sets out the likely time for rebuild from a disclaimed opinion. There has been further guidance issued this month by NAO called a LARIG 06, and that basically sets out some guidance for auditors on how they might approach rebuilding assurance. It's very much focused around the risk assessment processes that auditors will go through, and as EY we're currently considering that in terms of how we translate that then into an audit approach to actually start to rebuild. The likelihood is we will not be doing additional procedures in 24-25 to rebuild assurance, and will in effect be undertaking a normal audit which will look at auditing the balances as we would normally do, rather than trying to undertake additional procedures. That's for a number of reasons, but mainly it's unlikely that BDO are unlikely to conclude until later this year, and we are scheduled to start our audit round about November time. So in terms of the backstop date, that doesn't give a very long amount of time to start to do additional work, so we'd likely be doing that in the 25-26 audit. So that's quite a lot of background, I think, before going into the plan. But if I can then take you through the risks that we have identified based on our procedures to date. So they start on page 107. So we have the standard risk of misstatement due to fraud and error, which I'm sure you'll have seen in your plans in the past, and that is on the basis that management could, if they wish to, potentially override controls to misreport the financial position. So we have standard procedures we undertake to respond to that, which is focused very much...
Sorry, page 107. I've only got that 91. Was that a separate report that I'm missing any page? I'll do it,
It's okay. Okay, that's all right. No, I'd rather you safe.
Thank you.
Sometimes
Please continue.
the page numbers do get incorrect. So we undertake certain procedures, that which is mainly focused on journals, estimates and unusual transactions, because those are all the ones where there could be more intervention. We also consider whether there's any specific areas where there may be greater incentive and opportunity for management override, and the area we identify in all local authorities where there's a material capital programme is inappropriate capitalisation of revenue expenditure or classification of expenditure of REFCUS, and that's revenue expenditure financed from capital under statute. And that's because in effect that permanently moves expenditure out of the revenue account and into capital to allow it to be financed by capital resources or borrowing, which means it allows you to reduce the impact on council tax and the general fund balance. So that's an area we recognise as an area of incentive. So we will do specific testing around capital additions and refugee expenditure to address that. We've also identified valuation of property, plant and equipment, specifically other land and building, surplus properties and investment properties as another significant risk. That's because they're highly material balances in the council's accounts. The valuations are based on estimates and judgments, and therefore any small errors or changes in those estimates or judgments can have a material impact on the financial statements. We expect to engage our EY valuation specialists to assist the audit team in looking at that area, particularly because of the volume of investment properties the council has got, which are harder to value because of the nature of the valuation basis. We then move on to probably the more standard risks. So we've got pension liability valuation, which sure you've seen before. Again, a very material balance based on estimates and judgments. We will have a particular challenge this year because our normal procedure is that we rely on the work of the actuary as a management specialist and also engage our own specialist to support in that. But under ISA 540, which is the estimate standard, we're also required to consider whether we can form a view over the accuracy of that estimate. We don't know what the actuary's models are, and therefore the way we address that is we calculate our own model, produce our own model to calculate our own estimate of the liability in effect. We normally do that by rolling forward from the prior year. Obviously, we won't have a prior year work to roll forward from this year, so we'll have to build up that assurance from the date of the last triennial valuation, which was 2022. So that will just be increased work. It is work we can easily do, and we've done that elsewhere before, so we have an established methodology to do that. The next area is
sorry, just so that we're not racing ahead. I think Councillor Headley wanted to come in on that specific point, and then we'll continue. Yeah.
My understanding is that the Basildon Pension Fund, as such, is part of the Access Group at County, so it's they probably do report. I've never seen individual reports on members, but are you duplicating work that's being done by your company when they audit the pension fund as a whole? Because it would be a bit odd if you came to a different conclusion. And there's an awful lot going on, as you appreciate, in the pension funds at the moment.
So in relation to that question, there's two elements in relation to the pensions figures in the council's accounts that we look at. So you get your figures that feed into the accounts from something called an IS19 report, which the actuary for Essex Pension Fund provides to each of the different admitted bodies. To gain our assurance over the accuracy of that report, we, as I said, we rely on our pensions experts who do the roll forward of the Basildon specific calculated liability that the actuary provides. So that's not duplicating any work that's done by the Essex County Council Pension Fund. We do, however, place reliance on the pension fund auditor in terms of the assets figure. So they obviously do work over the pension fund assets, and we provide an IS19 letter to them asking them to provide us with assurances over a number of different elements, including that, but also looking at benefits payable, members data, etc. So that's an established procedure that's in place for all pension funds, regardless of whether it was EY or somebody else auditing that fund. We would send that letter and get those assurances, thereby minimising that duplication that you've referred to. Okay, so if I can move on from the pension liability valuation, the next risk we have is around IFRS 16 implementation. So this is the new standard around accounting for leases. This is something that's probably produced quite a lot of work for the finance team because the council will have a lot of leases. The key risk for us is that you've identified all your leases accurately and then that you've applied the standard correctly to identify any right of use assets that need to be brought onto the balance sheet. We would normally have done some preparedness work with you last year to look at your procedures, but because we didn't do an audit, we haven't done that. So therefore, we've identified that as a risk that we will need to do work around that to ensure that you've identified all relevant leases and treated them appropriately. We've then identified minimum revenue provision. That's very much because this is, in effect, a first-year audit for us. So the council is required to set aside sums in relation to borrowing that it takes out, particularly for capital spend, to ensure that at the point those loans need to be repaid, the council has sufficient funds to make those repayments. So it's very much around prudence in borrowing. The council has quite a lot of borrowing and quite a lot of assets, so we need to ensure that that minimum revenue provision has been calculated in line with appropriate guidance, and that guidance has been changing over recent years to reduce some of the borrowings that councils have been able to take out in the past. So we see that as a risk area we need to look at. And then finally, the last risk we identified was around group financial statements. So the council has a number of subsidiaries that it consolidates into group accounts. We need to do two things. We need to look at the group boundary to make sure that the correct entities have been consolidated, and then we also need to make sure that that consolidation has been undertaken appropriately, removing any intercompany transactions, etc. Again, can be quite a complex area. That's made additionally complex this year as a result of changes to auditing standard ISA 600, which relates to groups, and I'll move on to that in a moment because we have put some more detail in the plan around that because that is new for this year. I've also highlighted in the report our materiality levels. So our materiality is 4.4 million, and then we set what we call the performance materiality level, which is a lower level which builds in effect headroom for any undetected errors. Because this is again a first year audit for us and there's been a number of years with no audit undertaken, we have set that at 50%, and that's the lower level that we use. We would hope that we could build up to a higher level of 75% in future years. So that would obviously drive more audit work because we don't have the assurance over the control environment in effect. If I can, so in relation to the group, as I've already highlighted, we haven't yet completed all of our scoping because we're waiting for some information on that. My understanding is we hope to get that this week, which means that we can fully go through our risk assessment process for the group. That means we may have some additional risks which sit in the components rather than the council's accounts but flow through to the group position. And that's one of the things that ISA 600 drives. It requires the risk assessment to be undertaken by the group auditor at a much more detailed level than previously. So we may bring something back to you that highlights some additional risks at a component level. However, the way we would expect to get assurance over those risks would be by issuing instructions to the component auditor and for them to provide assurances back to us, and then we would review the work undertaken by those component auditors by reviewing their audit files and their reporting outputs. In relation to, so on page 129, we've included a bit more information about that group scoping. The other thing we also do is we allocate that performance materiality to the components, and again we haven't yet been able to do that because we need to conclude our group scoping, so we will update you on that once we have that. The other main area of the report really is our value for money work. Again, that is in progress and substantially complete but not yet been through final manager and partner review. We expect to focus on financial sustainability, as I'm sure you would expect us to do, in light of the pressures that are facing councils, and we may also look at the group governance oversight arrangements, but again we haven't finished our risk assessment, so at the moment I'm not aware of any risks of significant weakness, but that may change as we conclude those processes, and also again we will revisit once BDO have concluded their work. In terms of the timetable for the audit, we have been engaging with the finance team, but we're not expecting to actually start the audit in detail until November, December period, although we are hoping to do some sample selection or planning to do some sample selection in June or July, which will then help the finance team have time to pull together all of the information they need to support the audit before we come back on site in November. That means we should be completed in advance of the February 26th statutory deadline, and we are required to report to you the conclusions from our value for money work in our auditor's annual report by the end of November. That's an NAO requirement, so even if we haven't finished the financial statements audit, we will be reporting back to you by that date on the conclusion of the value for money work. Very happy to take any questions. Recognise there's quite a lot in the plan, particularly around the group scope, but hopefully, as I said, the cover report was very clear, and hopefully the report itself is clear, but happy to take any questions.
Thank you, Debbie. Yes?
Thanks, Debbie. Just a quick question. The group scoping, the timescale was the same as the value for money. Is that all to be concluded as well before you start the full audits, or does that fall on until February?
Well, the group scoping is to enable us to identify potential risks at the group level, then to issue the instructions to the component auditor to allocate our TE levels, which is the level we need them to perform procedures at and provide assurance at. So I think as soon as we get that information, we will conclude that work. So my intention would be we will get that done in July.
Okay, as soon as that, this month, so this month?
Yeah, because we need that to inform both the component auditors' work, because if we don't tell them till November, they'll have probably finished their audit by then.
Yeah. Okay, thank you.
Thank you. Councillor Murphy?
I can shout that then. Have the previous auditors give you any start information, or are you still have nothing at all from them?
We would only expect to get information from the predecessor auditors once they've concluded their procedures and report formally to the council. So it may be better for officers to answer that question. We have had discussions with them to understand likely timeframes, but ultimately until they conclude their work, they can't formally report to you. We would then review that, and if we think it's appropriate, we would review their files for any assurance we're placing to rely on them. If they're disclaiming opinions, they won't have undertaken any work, so there wouldn't be anything for us to look at from an opinion point of view. We would need to consider whether we wanted to look at anything in relation to the value for money work or anything else they've done.
So the answer is no. Okay. Right, that's that. Priority value against savings. Yeah, you did mention about value for money or risks, and you sort of mentioned about the fact that we hold a lot of property, for example. We have just spent a lot of money buying property for temporary accommodation, which is more to save money by having the property rather than any form of investment or any form. £100 a day, £700 a week. It's cheaper to buy stuff and resell it at a later stage, or so we believe. And I'm sure our officers have studied every figure and given good advice on that. When you look at these things, is also the savings considered within the risk of the fact that we might not get as much money back for the buildings, but we've saved £3 million in other areas in the meantime?
So as part of our work on the value for money, when we look at financial sustainability, we look at the council's budget setting, medium-term financial planning, and also savings plans. As part of that, we would consider any sort of invest-save schemes, which is the sort of thing that you're potentially talking about. So we would look at that in the round, so very much in terms of the council is presumably facing budget gaps in the future. We'll have plans and strategies in place to address those gaps and also to address service pressure issues. So we would certainly look at that in the round when we look at value for money.
Okay, thank you.
Anybody else? Any questions? No.
That's pretty clear.
Okay. Well, yeah, I agree that the plan is pretty clear. Thank you very much for coming up. I appreciate the frustrations that we've had with waiting for video, but yeah, no, thank you very much, and it's good to hear that work's going to be getting started soon. Okay, so move on. So item 4. Oh, sorry. No, item 4's been withdrawn. Item 5, which I believe is Mike.
Thank you, Chair. This is the 4th in a series of regular in-year progress reports for 2024-25, summarising the work of the internal audit and counter fraud teams. This report provides a comprehensive overview of our progress in delivering the 24-25 audit plan, the implementation of audit recommendations, and developments in our counter fraud activity. Since our last update, we have made significant strides in delivering the 2024 audit plan. A number of key audits have been completed, including fees and charges. This review received a limited assurance rating. Despite previous efforts to improve transparency and cost recovery, the audit found that many services still lack the tools and oversight needed to assess whether fees are set appropriately. There is limited evidence of cost recovery analysis, and the current framework lacks a monitoring structure to ensure compliance. This finding also echoes concerns raised as far back as 2020, indicating further action was required to embed a consistent and accountable approach. Looking at workforce strategy, this has awarded adequate assurance, recognising progress in areas such as apprenticeship development, the induction process, while highlighting the need to align the strategy with evolving corporate priorities. Turning to missed collections and complaints, this review received a no assurance rating, reflecting serious concerns around process compliance, data integrity and resident communication. A new staffing structure and in-cab technology are being introduced to address these concerns. In addition to that, we have a couple of audits that are currently at draft report stage, which is payroll and housing repairs right first time. In terms of implementation of audit recommendation, as at the 6th of June, there were 78 live recommendations, of which 52, based on the due date agreed when we issued the final report, 67% were overdue. These include 10 recommendations that are flagged as major priority recommendations, 33 moderate and 9 low. While the level of overdue recommendations is concerning, it is important to note that many of these are being actively addressed with revised timelines and new systems being implemented to support resolution. Appendix C of this report outlines the progress made on major recommendations, including those relating to miscollection, stock management and information governance. Turning to the work of the counter fraud team, between April 2024 and March 25, the counter fraud team handled 863 new referrals and closed 775 cases. Notable outcomes include £131,000 in terms of cashable savings, 1.78 million in terms of non-cashable savings, largely from cancelled right to buy applications. In addition to that, the team recovered 8 properties and stopped 12 right to buy applications. The assurance levels across our audit highlight a mixed picture. While many areas are performing adequately, the presence of limited and no assurance ratings in critical service areas such as waste management and contract oversight underscore the need for sustained focus on governance, accountability and performance monitoring. Failure to address these issues could impact the Chief Audit Executive's ability to provide a robust opinion on the Council's control environment, which is a key component of our annual government statement. I'm quite happy to take any questions in relation to this report.
Thank you, Matt. Any members want to get started? Yeah, Councillor Myers.
Thank you, Mike. So based on those areas where you said there's a limited assurance or no assurance, and of course the recommendations that were put out, of which 67% have not yet been implemented, how many of those 67% are in those no assurance, limited assurance groups?
I actually haven't done the analysis, but I can provide that information to you. I think in report, I think for each of the audits we completed, there is an analysis. I'll take that back. There is an analysis. Is it Appendix B? Let me just scroll down. I might have slightly misled you there. Let me just get. Where's paper when you need it? I'm just getting there. Sorry. Apologies. Yeah, so Appendix B, which is on page 38, lists all the audits we completed in the year and lists how many recommendations were made and each of the priorities. It doesn't actually say how many are currently being implemented. So that gives an overview of all the audits we completed. So the Appendix B lists each audit. So if I look at waste management miscollections, we made 15 recommendations, 4 are so far been implemented, and 11 are outstanding. Yeah, sorry, so I misled you. I had done the work. I thought I might have done the work. I was misleading myself there.
Thank you. Any other members? Yeah, Councillor Headley.
Yes, you have some sort of spreadsheet that details where individual discrepancies are. I'm guessing that individual departments and managers are then responsible for implementing an action plan. At what stage do you follow up on I mean, is it just left to the next audit, or is there a timeline where they are to report back that adequate measures have been put in place?
Yes, so we use the Pentana system, which basically captures audit recommendations. So all the recommendations are put on that system. What we get is a notification once the service department notify us that recommend is implemented. We get an email from the system. We then go back to the service department and ask for evidence to basically prove that recommendation has been implemented. So every recommendation that's on the system, we get a ping notification saying this is now being implemented, and then my team will go and ask the service department for information just to verify, check that that recommendation has been implemented. So all the recommendations are logged on this system, Pentana. So everything's on there. Also to note that the service departments and managers also get notified when a recommendation is due for implementation. So if they haven't done anything, they also get an email trigger saying, pull your finger out, you need to do something now.
Right, thank you. Any other members? Yeah, Councillor Myers.
Yeah, thank you. So going back on some of these, obviously we risk assessed what the particular issues are, and obviously there is one here where, excuse me, information governance, which of course with data protection law and everything else is very important. Now, 8 recommendations made, 7 have been implemented, but yeah, there's one that's major. Obviously, in terms of what we've seen in the past with data breaches and what happens, especially with officers and councillors, where we receive numerous spam emails a day with certain, don't click this link, etc. It's probably why I'm logged out my laptop, to be honest with you. But it seems to me quite clear that some of these audit trails and what we need to look at in terms of the security to the council going forwards and the risks that presents in terms of information governance and in terms of sort of cyber security as well are important. So when we're looking at, okay, they've done 7 out of the 8 recommendations, but yet we're still looking at the fact that the one major one still hasn't been completed, and I'll be following that up quite strictly, because they might do the 4 or 5 low ones to say, they can be done in a couple of weeks. But in terms of the timelines and seeing some being pushed back, do you get reasoning as to why they're being pushed back, and can we as a committee see the reasoning why it's been pushed back? Is it because of staffing changes? Is it because of money? Yeah, in order to do so. So new software needed to be used, new systems put in place. So do you get that feedback as well, or just we can't quite do it yet, let's push it back to a further date?
What should happen is if the date's not met, manager can add a note to Pentana to give a reasoning behind that why they missed the date. So we do ask for notes on the system, and that recommendation information government, there is another appendix C which sits under that. So that actual recommendation's probably on there, and the reasons why it's not been actioned to date. If I just scroll down, we can probably find it. Bear with me. If someone wants to shout they found it already.
Page 40.
Page 40, okay. Yeah, so the recommendation is about information asset owners will be requested to review and update their service area retention schedules. So the last update posted was the 6th of January in 2025. It said information has been sent to all directors regarding the application and retention period to documents. So they've been reminded of the need to do something, and that was back in January 2025. So, yeah. So we can chase that up again in terms of actually where they're at.
Okay, thank you. Yeah, Councillor Murphy.
So that end, surely when the initial problem was highlighted and it went out, surely the heads of departments or whoever it went out to it should be reminded that they should come back to you when they had completed it, or on a monthly, weekly, yearly basis by the sound of it?
We actually use the system Pensana to notify us when it's been implemented, so we get a notification when it's been done. But we also chase them on top of that. So we do send out chases to managers saying, here's the list of outstanding live recommendations. Please, can we have some progress on that? But the system will also notify my team when that recommendation's been implemented, and then we will chase for evidence to confirm that is the case. So it's all managed through this Pentana system. But we do go to corporate leadership team, and we do highlight to senior management the number and categories of overdue recommendations, and there is a push on that to that effect.
Yeah, but in that particular case, is there a defined finish to it? Because if you're talking about information to be presumably destroyed or stored or whatever, it's an ongoing thing. So surely it never quite ends. But
in this case, it's asking for retention schedules. So basically, you've got to produce a retention schedule and put in that schedule what is their period in terms of when will they destroy stuff. So what we're looking for is information asset owners to produce a retention schedule. So there is an end to it. So when they produce a document which is outlining their document retention approach, then we'll sign it off. So what we're looking for is then to define how long they're going to keep documents. That's what the recommendation is about. Remind them. So yeah, there will be an end. There will be an end. No, it's basically asking the information asset owners to put in place retention schedules, and once we've seen a retention schedule, we'll say, thank you very much. Tick, tick, yeah.
Councillor Myers?
Yeah, as I'm new to this and everything, I was just wondering, in terms of when you identify the issues and the particular recommendations that internal audit want to make, who sets the due date originally of when these issues should be completed by, firstly?
We've changed the process in recent years, and our internal audit doesn't actually make any recommendations because it was felt that if we made a recommendation, the service department didn't own them and then were reluctant to implement them. So now we issue a report with issues, concerns, and it's now down to the service departments to come back to with actions. But we agree those actions and the dates with service departments. We do ask them to be realistic because we don't want to keep seeing moving deadlines. So the actions are agreed with the service department. So we highlight the concerns. They then set out what actions they're going to take to mitigate the risks, to put the things we've identified right. So yeah, but it's the service departments that, to answer your question, it's the service departments that agree the dates.
Yeah, Councillor Myers.
Yeah, because there's one quite particularly long one here, which is on page 38, the robust and effective procedures, local land charges process. The original due date was the 31st of December 2020, and the new due date is the 30th of June 2025. So I've read through the latest note and reminded myself of what it was. Going through it, and temporary resources, etc., to be in, but I mean, that's been over 5 years. What kind of chase have we had? Because obviously, it's down as a major is obviously an issue here when we're talking about the retention of legal documentation for land charges and things like that. It's obviously very important. There's also sort of an information governance point as well in terms of retention of the land charge registry and everything else.
Yeah, I mean, rather sarcastically, I've asked the question, does it really take 5 years to write a procedure? But it's taken a long time to produce this document. They've had several restructures in that department, and we're still waiting for the revised document and procedures. But yeah, they are constantly chased. Yes, I can understand your concern in relation to this. It's now been outstanding nearly 5 years. They provide regular updates, but yes, the question should be asked actually, how long does it actually take you to write a set of procedures? That question has been asked on a number of occasions.
Yeah, Councillor Myers.
Yeah, and I think really it's not just like having said, but I think like really ask them, can you give us a soon realistic timetable when that will be completed? And obviously if they say, for whatever reason, then come back and tell you, then to come back and tell us of what the issue is, because obviously we don't want to see major risks here, that are taking too long to solve and to deal with. It's writing procedures and things like that. It shouldn't take 5 years to do so. So I think a bit of a stronger hand in this. I know you don't give recommendations, but you chase people. But I think it's a worthwhile saying it's been 5 years. We've got regular updates for you, but what is your actual movement on this, and when are we likely to see it being mitigated? And I think a little bit more of a firmer approach with this particular one would probably be worthwhile.
Yeah, I mean, what we can realistically do, we can bring the service department, the head department, to the audit and working group and ask that very question. That's something we can do, but I'll also remind them actually what is the realistic timetable in terms of those procedures. I mean, we do that quarterly, so, but yeah, if it would help, like that bit of challenge from members in terms of service departments, we can go to the audit and risk working group and yeah, the question can be asked by members of officers, what is actually happening in relation to that matter.
Yeah, thanks for that. And yeah, I find myself agreeing with Councillor Myers that 5 years for a set of procedures is an awfully long time. And you mentioned the number of restructures they've had in that department. Is that all the more reason to get it done as quickly as possible, just in case there's another one down the line. Any other members got any questions on this one? Yeah.
Well, it's to basically cover that and something else I discussed with the officers early. There seem to be certain points that are quite important that we have to hunt out. Once we brought them to, or they've been brought to our attention by yourselves or by us, could we have a regular update every meeting on the important ones that we bring up? So this one being an example, the legal complication with the past auditors that now tell us there's a legal computation. So as part of the initial audit and risk report or the meeting, we get bump, 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 bump. These are 5 that are important to you in the past, and these are where we are at the moment, so that we don't let anything slip into obscurity, and everything is to the fore, which is problematical. Thank you.
I'm sure there's something we can do.
Yeah, no, I agree. That would be helpful to everyone, I think. Any other points? No. Well, yeah. As you mentioned in your report, Mike, the big glaring one is the miscollections, and so I'm glad that the new in-cab technologies sort of working to resolve that, and it'll be good to get an update at the next meeting on that to see how that's coming along, because it is the sort of big red mark in the agenda.
What I can add, Chair, is that we actually have a follow-up audit in the audit plan for this year. So we're giving it sort of a few months to embed, and then we're going to go back and complete the audit review again, and we'll bring the results of that audit review back to this committee.
Brilliant, thanks. If there are no other questions on this one, this item's just for noting, so noted. And so on to item number 6, which is also, Mike, the internal audit annual report 24-25.
Thank you, Chair. Okay, so this report provides a comprehensive overview of the work undertaken by the Internal Audit Service over the past year and delivery against the annual audit plan, and also provides for the Chief Audit Executive's opinion on the adequacy and effectiveness of the Council's governance, risk management and internal control arrangements. The purpose of this report is fourfold: to communicate my overall opinion on the Council's controlled environment, to highlight issues relevant to the annual governance statement, to summarise the audit and assurance work completed, and also to report on the performance of the Internal Audit Service, including compliance with the new global internal audit standards that came into being from January 2025. So based on work completed for 2024-25, and must report that only limited assurance can be given regarding the Council's risk management, internal control and governance processes. While policies and procedures are in place, there are significant gaps in implementation and compliance. These weaknesses undermine the effectiveness of our governance framework and pose risks to service delivery and public trust. In terms of key findings, I'll talk about governance now if I may. Persistent issues continue to be highlighted in successive annual governance statements, suggesting that fundamental challenges remain unresolved. These include non-completion of mandatory statutory training requirements by staff, ongoing weaknesses in contract procedures compliance, inadequate justification for direct awards, failure to follow project management approved gateways, and delays in timely engagement with support services, failure to provide regular updates on risks, KPIs, budget monitoring and audit recommendations. Turning to internal control, of the 14 audits completed by my team this year, 1 received no assurance, 6 received limited assurance and 7 received adequate assurance. These results reflect inconsistent compliance with internal controls and highlight the need for urgent remedial action. Turning now to risk management, the Council has a mature framework, but documentation and formal review process needs strengthening. A more systematic and aligned approach is required to ensure risks are properly evaluated and managed. Turning to counter fraud. As I said earlier in my progress report, we've looked at 863 fraud referrals, over 1.9 million in savings were identified, 8 council properties recovered, 12 right to buy applications were also stopped. In terms of the work of the internal audit team itself, the internal audit service continues to operate in full conformance with the global internal audit standards. Our quality insurance and improvement programme was updated in May 2024. We remain committed to continuous improvement, professional development and maintaining strong links with audit networks across Essex and beyond. Looking ahead, while the report highlights areas of concerns, it also provides a roadmap for improvement. Key priorities for 2025-26 include strengthening compliance with internal controls, enhancing governance and performance management frameworks, ensuring timely resolution of outstanding audit recommendations, supporting the Council in meeting its statutory audit deadlines. In conclusion, the opinion reflects a balanced view of the year's audit activity and other assurance resources. Whilst there are strengths in fraud management and some areas of adequate control, the overall controlled environment requires significant improvement to ensure proper governance and risk mitigation. This report should serve as a call to action for all of us to work collaboratively to address the identified weaknesses and strengthen our governance and control environment. I welcome any questions on my own report.
I think Councillor Headley beat you to it there. Councillor Myers.
It's a fairly depressing picture that you painted there. Do you believe you're getting the cooperation of the senior management team to address what is quite serious issues that you're highlighting? And are you sufficiently resourced to carry out the function of your department?
In terms, I'll deal with resourcing. Yeah, we are sufficient resourced. We have quite a large audit team who are all qualified. In terms of support from leadership team, Gary Jones, who's the Chief Executive, is identified this is a year of compliance. So the Chief Executive has identified there are a number of issues and concerns that need to be addressed, and in doing this, he's put forward a number of areas for review under the umbrella of the year of compliance. So yeah, I think this is now given sufficient weight by the new Chief Executive that there are concerns. He understands there's a need to address them, hence the term year of compliance. And I think there's 11 work streams, Tina, that are now being put forward for review. So
yeah, I'll just add to that, under the year of compliance, each of the AEDs assistant directors have got one of those, and it's outside of their area of expertise. So, for example, I'm not doing finance. Someone is outside looking to see what's stopping people complying with the processes. So that work's just kicked off under Gary's year of compliance.
To pick up on what you said in terms of, I've been here, I think, 17 years now, and I think this is the first year that I've actually issued a limited assurance opinion. So it's quite worrying, but I think that the new chief exec has recognised this and pushing forward with a year of compliance. So hopefully things will change in the next few months.
Yeah.
I hadn't heard of the year of compliance until 2 minutes ago. How's the problems that have arisen in external audit, has that impacted on, the only word I can think of is, if you can't get your external audits done, maybe that internally there's been sort of a lackadaisical sort of approach to, they can't get the audits done, it's all, whether we comply or not, it all seems to be just too much. I'm really concerned that we are, one of the other risks that's on the horizon is local government reform. And it's going to be interesting to see whether councils will have all their finances in apple pie order before the disaggregation of assets and finance into the new authorities. I think we need to put pressure on internal compliance in the year of compliance, but we also need to be, I think we were being as strong as we could be with external auditors, but it was like a black hole, to be honest. Lots of information went in, but very little came out. So I think officers have my sympathy. They're running against a very tight timetable in an era where we really don't know how stable the finances are in local government. That wasn't a question, that was a comment.
Yeah, thank you, Councillor Headley. I completely agree with that. As I said in my full council speech, which I'm sure you're all listening very keenly to at the last full council, getting these audits, the external audits, but also sorting out any internal issues up to date in time for LGR is certainly a priority for me personally. But yeah, and it'll be good to get a progress report on the year of compliance sort of later in the year to see how that's coming along and what impact the diktat from the chief exec is having on our progress on getting internal audits up to date. Any other comments? Yeah, Councillor Myers.
Thank you, Chair. On a slightly happier note, congratulations to your counter fraud team. And what you're doing in that front. I know it can be, sometimes painstaking investigations to check each individual case and to ensure that people aren't trying to sort of play the system in order to get a benefit out of it. So that's very good to hear. Your progress from this. Was it your yearly report? Was it for this one?
Yes, it is.
Yearly report. Yes, very good. Based on what we were talking about in your previous report, because these do both tie in, when we were mentioning about the current states of some of the major audits that were going on, and there's a list, and I didn't mention all of them, but obviously I think the gist of the conversation that we've had this evening is about making sure we chase those up and get those done. In terms of, as you said, 14 new work streams that have been identified?
I think it's 11.
11? 14?
Yeah. It's about 11.
10 plus, right.
Yes.
10 plus. Will those going into sort of each department and with the chief exec's year of compliance? I mean, is there a badge for that? Because I know Essex had a year of numeracy and a year of literacy. We had badges for those, so we were fantastic. There is a badge for that. Will that affect, if it's new, will it affect the current compliance rules, audit rules that we're currently following at the moment, with the ones we've highlighted this evening, and the ones that are sort of outstanding but low and medium risk in terms of compliance in audit with data management, information governance, etc. I mean, are all these new work streams to follow, or are they also going to be included in the existing ones, or is it all tied together?
In reality, it's all tied together. So basically, what we have to see out of it, that compliance is where we're at. So things like managers providing updating the system in relation to recommendations, KPIs, risks, all that. So these work streams want to identify the reasons behind non-compliance and try to engage with officers. So basically, I think it's all tied up. So this whole compliance work stream is about improving the service, improving the organisation, ensuring managers must comply with support and back office support functions, because the support office functions do a lot of work. We just need managers to comply. That word again. But yeah, so there's a lot of work we do, like recommendations. It's ensuring the compliance. And I know officers and managers have a lot of other priorities, namely devolution, LGR, to contend with. But at the end of the day, when you're failing to address audit recommendations, the control framework's getting worse. So it basically, things start to go from bad to worse. If you don't address the internal controls, then it's not going to get better, is it? So it's key that actions and recommendations for internal audit are taken seriously. I know officers have a lot of work to do, a lot of things on their plate, but I don't think not addressing audit recommendations is one of the things that they can put way down the list. It's got to be further up the list in terms of their daily activity.
Yeah, Councillor Myers. Yeah, I completely agree with you. I think it's always the thing to get your own house in order, steady shit before anything else happens, because when you start talking at LGR and as Councillor Headley mentioned, the divvying up of assets and control of services, etc., and where is this going to go? Where's that going to go? I think it's important that not just us, but the other councils in Essex and the other areas that are going through this process are currently compliant in terms of their internal audits. I think it is very serious that there are cases here where you've given a report for the first time in your 17 years at the council, where you said you're not assured about the compliance with the audit, internal audit. So I think it is very important that we move this up to the top of the agenda to make sure we sort it out, because at the end of the day, governance and everything else, it all comes down to wastage and taxpayers. So I believe it's very important that we get that as high as possible to comply before the next 2 to 3 years.
Just standing on my soapbox for 1 minute, I think it's fair to say that internal audit's not necessarily given the priority it should have been over the years, and I think internal audit's key to driving forward service improvements. I mean, I see myself as like the council's guardian angel. We're there to support you, help you. So basically, we can see where services are failing and highlight actions for improvement. I think obviously there's competing priorities, and sometimes internal audit is not at the top of the list, which I've sort of said a few times tonight, but I think it should be elevated up there. I think sometimes internal audit's forgotten that you only come to internal audit if something really goes wrong, but the rest of the time you leave us alone. But it's not how it should work. We're there to continually remind service departments and managers of issues, concerns. So I think it's a priority that under the year compliance is something we need to address.
Yeah, Councillor Murphy.
There's 2 points there. The first one, you said everybody's very busy. Is there enough resources out there at the present time to deal with your recommendations plus the work that they should be doing on an ongoing daily basis, and prepare for this adventure we're going to have in the future?
I don't think I can answer that. Perhaps Tina might like to say something.
I was just going to add that coming in relatively new, it's been quite a lot of change going on in terms of the structure, and I think they're starting to bed down from what I've seen in the first few weeks that I've been here. So we have resource. It's possibly about the privatisation, and the year of compliance sort of starts to bed that in, that we need to get our house in order.
And the second part of the question, when we obviously get our house in order within this year, hopefully, because this is the year to get it done, I'm assuming that everybody, all councils are working to the same hymn sheet, as it were, so there should be a painless joining of councils, whoever we join with, if everybody is doing the same thing at the same pace and is in the same stage, which should be the point of excellence. It will make it easier for the transgression into our joint new administration at some stage. You can toss for each one.
I commend your optimism, Councillor Murphy.
I'm just going to say I'm not sure we know at this stage.
Oh, okay.
In terms of where every council is at the moment.
As I say, does to name a council, does Thurrock have the same governance and internal audit trails as we have? Or have we created our own and they created their own? So should we join, we say with Thurrock, we don't get a situation where there's two councils clashing and say, well, we do it this way, you do it that way, and it all starts again. But we've got to find a way through all this because nobody's doing it the way. If you should become chief of the new council and you know you're going to say, oh well, Thurrock, we don't do it that way, we do it this way. You have your assistant who was the old chief of Thurrock and say, no, we do it this way, and all. Well, we better go away and have another think about this and reorganise for another 5 years, and it'll be a total mess.
In terms of internal audit is a statutory function which local authorities must have. It doesn't have to be provided by an in-house team. We are an in-house team, so you can actually procure an accountancy body, such as BDO, to undertake your internal audit work. But yeah, it's a statutory function. Internal audit provision is statutory under Local Government Act 1972, so you have to have a provision for internal audit, whether it's in-house or not. And in terms of internal audit, there's the global internal audit standards, so we have to conform with those in terms of how we operate. So every in-house external firm has to comply with the new global internal audit standards, which came into effect from 2025. That essentially defines your operation. It's like a Bible. It sets out the rules and responsibilities of the internal audit function in terms of what you must do. So we should all be in compliance with that. How good other teams are, I wouldn't like to comment.
Oh, no, I was just asking. I mean, we want to be, whenever anything happens, we want to be at the top of our game. All I'm saying is they have the same Bible as we have, and assuming that we're on, you know, the New Testament, we don't want, and they're on the Old Testament. You know, that's their problem, not ours. But we want to be at the front, but we're all supposed to be complying by that Bible.
Yeah, so I'm sorry, we haven't got your name tag.
I'm Chris.
Chris.
Yeah, just a couple of things. The first one's not a question, but just to echo Councillor Myers' comment around the fraud referrals. 863 is some going, 1.7 million non-cash savings, so well done. So just want to echo that. And then the second part is a question, actually, probably maybe more for Tina. You talked about the 11 work streams. Is one of those mandatory training? Because you talked about that in your opening dialogue, Mike, and if mandatory training isn't being done, that kind of, well, if it isn't one of the work streams, can I suggest it is?
The elements should pick up where there is mandatory staff training. For example, under health and safety, there's compliance with that type of training. So it should be within each work stream.
Thank you.
Okay, thank you. Councillor Davis.
Thank you, Chair. Mike, do you think that, given the conversation we've had so far, that a letter from the Chair of the Audit Committee to the relevant directors, the ADs, etc., would stressing the urgency and the wishes of the Audit Committee to comply with an internal audit and to assist in every capability. Would that be beneficial to your work?
Yes, it would be beneficial. What I can say is that the previous chair, Councillor Cannon, did exactly the same, what you said there. So that has been done before. I think a little reminder probably wouldn't go amiss in terms of actually, this is a serious issue that the Audit and Risk Committee are concerned with. But yeah, I mean, I think Councillor Cannon did produce a letter to the Chief Exec previously in relation to audit recommendations and actions, and that he was concerned about the lack of the number of overdue recommendations. But yeah, I wouldn't say a reminder wouldn't hurt, or a fresh pair of eyes or a fresh letter, given the year of compliance.
Yes, thank you, Councillor Davis, and yeah, I'm happy to take that offline with Mike after the meeting to discuss how we go about that, because yeah, I think it's important that given the downgrade really from adequate to limited, that we get things back on track as quickly as possible. Councillor Myers.
Yeah, just based on that point, and thank you for confirming that a previous letter had been sent out by the previous Councillor Cannon. May I just request that when that letter is sort of drafted, that we get a first sight before it's sent, so that we're all happy, or if we want to make any adjustments to that through Mike as well.
Yeah, that's that. I'm happy to share it with everybody once we've discussed it. I think if we wait till the next meeting to debate it, then that'll be too late. But I'm happy to sort of have it offline so that everyone can have a look at it. But yeah, that's not a problem for me. Any other members? Just sort of the big picture really from me of as you said, Mike, is you've been here you've been doing this for a while now, and this is your first time going downgraded to limited, which is obviously a concern. I mean, what are the big picture reasons for the downgrade? Is it just a lot of things taking a lot of time to happen, or is there sort of a big issue that wasn't resolved?
I think this time around, and it's based on obviously the work we undertake during the course of the year, and also other sources of assurance. So it's not just my assurance, but in terms of the overall numbers, we've seen an increase in the number of limited and no assurance audits. So previously there might have been adequate or substantial. We've got no substantial opinions this time. So I think it's just a weakening in the overall control environment, and that may be attributable to other priorities. Yeah, it's basically the results of the audit. My work during the course of the year have highlighted more concerns than in previous years, and that's borne out by the number of limited and no assurance audits, and also other sources of assurance obtained as well, from the likes of the risk management team and the governance team. So it's just not my opinions, but yeah, this is highlighting a weakening in the control environment.
Okay, yeah, thank you very much. If there's no other members wishing to speak, then thank you very much, Mike. That item is again for receiving and noting, so noted it. On to item number 7, which is Capital Investment Strategy Annual Report, which is Tony.
Thank you, Chairman. So this report sets out the year-end position in respect to the capital investment strategy. The strategy for 2024-25 did come through this committee and was agreed by Council in February 2024 as part of the budget setting report for that year. Essentially, the budget sets out a framework or a delegation for the officers to work within, and what it primarily deals with are 2 things. The first one is the management of the council's debt position. So when the council borrows or undertakes other types of debt, we manage that position on behalf of the council. But we also look after the day-to-day management of the council's cash flow. So we make sure that there's enough money in the council's accounts to pay any liabilities as they become due. And we also invest any surplus cash for some return to the council. Just wanted to bring a few of the main points from the report to the attention of the committee, and to start with, a lot of these are from enclosure number 1. So during 2024-25 there was £119.5 million worth of capital expenditure during the year, and after carry forwards there was an overspend of 56,000 which related to asset management and repairs. Of this 119.5 million, some 72 million of this was funded from borrowing. In addition to what was in the capital programme, there was a further 31.5 million of capital spend which sat outside of the programme, and these items are set out on page 82 of the agenda. During the year, net debt increased by 117 million, with the closing position of debt at 638 million at the end of the year. Gross debt at year end was 690 million, of which 260 million belonged to the HRA and 430 million to the general fund. The table that I've included on page 83 shows the in-year movement in debt, so it shows what we've taken on during the year and what's been repaid in year as well. The graph on the same page shows that the debt was managed below the levels that we expected, the control levels that are put in place by the strategy, and those levels being, first of all, the capital financing requirement, and then the operational boundary and the authorised limit. So we managed the debt below the levels that we were expected to manage within. Average debt for the year was 615.5 million with an average rate of 3.27%. Obviously that includes older debt as well as current debt. The current rates are quite a bit higher than that. Investment of surplus cash generated the council some 2.1 million in investment returns, mainly because the interest rate associated with that was higher than we expected. So we had an average rate of 5.87%, and we budgeted for 3.3%. But obviously, that works both ways. So the interest rates that we paid on our borrowing were also higher. So there were some offsetting of variances at the end of the year as a result of that. The graph that's been included on page 85 is the maturity profile for long-term loans, and that just gives the committee some assurance that we're spreading out those repayments so that we haven't got too much being repaid in any single year. It's part of the measures that we use to help us manage risks around those type of activities. The report, in terms of the commercial investments, the table on page 86 shows the position in respect of the council's investment properties. And again, you heard Debbie from Ernst & Young earlier talk about the changes to the provision for debt repayment. This is one of the areas that is affected. So we've now got to make a provision for the repayment of debt in respect to these properties, and that's had the effect of essentially wiping out any of the surpluses that the council made on those investments. So overall, at the end of the year, there was a surplus of 133,000. So there is a small surplus, but we had originally, when we entered into those arrangements, budgeted for a lot more. During the year, the council continued to finance Sempre Homes as the ultimate parent of the company. And at the end of the year, the total investment in Sempre stood at 48.7 in long-term loans, 2.4 million in short-term loans, and 24.5 million in equity in the form of shares. Investment leases operated exactly as expected during the course of the year, which was good news. Payments under the free leases were some 6.6 million, so that was what we paid out to the investors. Receipts that we got from our tenants were 9.7 million, and that gave us a profit rent during the course of the year of 3.1 million. Enclosure 2 provides some of that information in pictorial form in a dashboard, and provides a little bit more detail in terms of some of the balances, goes down into a bit more detail. And enclosure 3 really just deals with the budgeted position and the year-end position in respect of the potential indicators that we're required to publish at the end of the financial year. I think that's most of the points I wanted to bring out of that report, Chair, and I'm happy to answer any questions.
Thank you very much. Councillor Headley?
Yeah. If I refer to the first full paragraph on page 78, states that the council delegates all executive decisions on borrowing, investment and financing to the Chief Financial Officer. Are we really saying that there's no oversight from the administration other than minimum of three report backs? I'm very concerned that we're aware that in other authorities there was delegation of borrowing and financing without oversight by the members, the elected members, that led to a substantial deficit on a number of councils that then filed for 114 notices. So are we saying that the recent borrowing and investment in properties in this council was exclusively done by executive officers without any oversight by the administration?
So what the strategy is designed to do is to give a delegation for the day-to-day operational activities of this particular area. It doesn't, and as officers we wouldn't be allowed to operate outside of those parameters without coming back to this committee and requesting an amendment or a change to the strategy at the beginning of the year. The strategy itself sets out in quite a lot of detail the investments that are planned during the course of the year, and they're, I suppose, in three forms. The first one is the capital programme, so what we expect, the capital programme and how we expect that to be funded. The second one is any commercial investments. We haven't done any of those since the rules changed back in 2020, but if we were to undertake any new commercial investments, they would be part of that as well. And then the third one is how we deal with treasury investments. And when we look at those, what we're talking about is just short-term investments to surplus cash flows. We're not talking about the type of investment that we've seen elsewhere in other types of operations. I won't name them, we all know what they are. But we're not talking about that type of investment. We're just talking about use of money market funds, call accounts, those type of activities for short-term investments. And the way that we operate those is under the order of security first, then liquidity and then yield. So the first thing we do is to make sure that any funds invested are secure, and then we look at the liquidity, so how quick we can turn it back into cash when we need it, and then only when we've satisfied those two requirements do we consider what the actual return is. So there's some safeguards in place. The reason for the delegation, I guess, which is the point of your question, is that we need some freedom to be able to operate on a day-to-day basis. We're in an area where interest rates are quite volatile, they change daily, and other factors, other economic factors can affect decision making. So it'd be difficult to bring every decision back to members to get them to make those decisions. So I guess what the strategy is seeking to do is within those boundaries to give us some room to work, but within some safe limits, so that members can be assured that we're acting within those limits that are set by the strategy.
Yes, I didn't want to get too specific, but are you saying that when the council took the decision to acquire the property in Bradford Way, Billericay, that was made by officers or was it made by members? Likewise, the Westgate, was that an investment where officers recommended it to the administration, or did the administration say to officers, we want to acquire this?
I think both of those investments were as a result of cabinet decisions. So if we want to amend the capital programme that gets approved as part of the budget setting process, that's a function of cabinet. Officers haven't got the power to do that. We can move budgets around within boundaries, but to a certain level. But we can't add new items into the capital programme without coming back through cabinet.
The delegation is separate from acquisition of new ventures, I guess is what you're saying.
Yes, absolutely.
So where does that borrowing come from to acquire new properties?
So what the cabinet report will do will seek an amendment to the capital programme. It will then it will then set out how that amendment should be financed. Now, if that financing is through borrowing, then what will happen is that will increase one of our limits, the capital financing requirement, that will push that up. But that doesn't necessarily mean that when we're managing this on a day-to-day basis, that we will immediately go out and borrow, because the council might have, cash surpluses, or we wouldn't invest surplus cash if we were going out to buy something that we needed to buy. So we would use that cash first. So although the borrowing is determined by the cabinet decision, the timing and the type of borrowing that's undertaken is a decision of officers, but that's based on the council's cash flow position, which is why our borrowing, we try and keep our borrowing below our capital financing requirement. The capital financing requirement, if we went out and borrowed every single penny that was approved, both currently and historically, we would have debt up to the level of our capital financing requirement. The fact that we're managing below that level means that we've got internal cash resources that we're using, as opposed to going out and getting borrowing. In terms of the sources, we tend to just, there are two markets we're using at the moment. One is borrowing through PWB. That's a rate we can't, for long-term borrowing, that's probably the best rate that's available to us.
On that point,
Yeah.
my understanding was that the government changed the rules around the Work and Pensions Board, that you couldn't use that as a way of financing investment, particularly in property investment. So that, as I understand it, is off limits. And I am concerned that the introduction of IFRS 16 is, another financial measure to look at what essentially councils might have been using as loopholes to balance their books through creative accounting.
Okay, so the change in the PWB borrowing rules, what that set out was that the council could not go out and borrow for any investments that were what they described as debt for yield. So what they didn't want the councils doing was going out and using that money to invest in assets purely to generate a financial return for the council. What we are still able to do is to borrow for service-related activities. So if you are, for example, buying a shopping centre or a building that you're going to use for regeneration or for providing services to the council, that's completely acceptable under the rules, even if part of that may be used for what seems like commercial purposes. As long as that's not the primary reason that you're undertaking the borrowing, then that's permitted within the rules. I think so just as an example, in the past, the investments the council's done where it's bought property outside the boundaries of the borough, we would no longer be allowed to do that. That's prohibited under since the rules changed, we haven't done any of that. But what it doesn't do is stop you from borrowing for investment in properties and other assets within your boundary for service-related reasons, even if that's regeneration.
Thank you, Councillor Hadley. Are there any other questions? Yeah, Councillor Myers.
Thank you. So obviously going to the investments of outside properties and the new accountancy rules, we're saying of what has to be accounted for when could you where we're accounting for the debt repayments that have to be made on the outside investments. So what happened before? Why weren't they accounted for before in terms of what the assets were? Because obviously we look at returns, and I believe I saw a couple of audit reports, 22 and 23, when I subbed a couple of times, basically saying that the investments were yielding X amount of million, but now basically it's all been wiped off to 133 grand using new accounting. So how did we handle that borrowing and debt before?
So the way those investments worked when we first entered into them was we had a target return of 5% of the capital value of the asset, and then what we applied to that was a 3% borrowing cost. So at the time these were bought, remember we're going back a few years, that was a reasonable interest rate to use at that period of time. And then the target return was the remaining 2%. And in respect of provision for the repayment of the actual debt, what the assumption that we made at the time, and this was not anything that lots of other councils were doing as well, the assumption that we were making was at the point when the borrowing became due, we could sell the asset and use the capital receipt that we gained from the asset to repay the borrowing. And the way of managing the risk around that was, what we said was, if the value of the property fell below what the council had paid for it, then we would make a provision for repayment of debt for the difference, so that at any point, if you then projected that forward to the end of the 50-year period, there would be sufficient value in the asset to generate a sufficient return for the council to repay whatever debt was outstanding at the time. So that was a theory that we used prior to the change in the rules. What the rules now say is that we must make this provision against these assets regardless of the value. So they've not linked, so the provision is just around the whatever the debt is. There's no link to the value of the asset anymore. And what that means is the maximum life we can make that provision for is 50 years. What we did is we discounted that 50 years back, because obviously they've been on our books for a few years. So we've got them a combination of sort of 46, 47, 48 years, depending on when they were bought. And we're making a provision which is around about the 2% mark. So that's had the effect of effectively wiping out that remaining target return that we had on those assets. So at the moment, they're not really generating any return to the council apart from those that amount that is set out within the report. But that's basically how the rules changed and how they affected what we were doing.
So basically, it is at the sort of a swing in the accountancy rules and everything else. Obviously, the properties do have value, but they're not making a return because of the way the rules have changed in order to handle its debt we were originally purchasing them. Okay, I do understand that. Thank you very much for explaining that in certain layman's terms. Yeah, thank you very much for that. In terms of their value, of course, they have, a few of them have dropped quite considerably since the purchasing. I mean, do we know, were they overvalued to start with? Obviously, looking at other councils in the past with assets where perhaps they were overvalued. I mean, you look at some acquisition cost of Stevenage, 18.5 million. Now asset value is now 12.5, for example, and Bath 6, now 3.9, Tunbridge Wells 6.3, now 5.9. Solihull seems to be holding up quite well, so does Northampton, but Richmond's dropped from 8 to 4.5. So just wondering, sort of market values, because we see prices of land increase, we see prices of buildings increase. Just wondering what, was there an overvaluation, do we feel, in the assets, or the actual costs, or something that we can document from mortgage providers and things like that?
I think it's so whenever we bought any of these assets back in the day, we did get proper external Red Book valuations on all of the assets. We were advised by property consultants as well. So we had those two things that gave us assurance. I think it's important to remember that they were all bought pre-COVID, and that's had an impact generally on asset valuations, and there are other specific events that may also be impacting on particular. I mean, we've got a number of our sites are relying on retail type tenants, and I think those are probably not. Those are generally have not recovered as quickly as some of the other. I mean, I'm not a property person. I'm a numbers person, so I'll do my best to give you as best I can on this. But my understanding is that retail type properties have not recovered quite as quickly as some of the other areas that have recovered a bit more quickly post-COVID. And of course, the other thing that does impact on valuations and the way that these assets are valued is the tenancies, because what they tend to do with these is the cash flow, the life of the income that these things are likely to generate, and then they modify that figure to give us a valuation. And again, from year to year, that can change. So I think we've got a couple of our assets where we've struggled a little bit to get tenants to fill vacant units. But if we did get one in, that would have a quite significant change on the valuation. So it's difficult to give you a yes or no answer to the question. All I can say is that I'm satisfied, as far as I can be, that the council was properly advised at the time, and we used the information that was given to the council in good faith. And I've got no reason to believe that there was an overvaluation on any of the assets.
Okay, thank you. Any other comments on this item? Yep, Councillor Murphy.
I've got a little bit confused halfway through that. So if we owe some money on an asset, I can understand if the asset is depreciating and we're making an allowance. So when we sell it in 50 years' time, that we have the money to plug the gap, should there be one. And now it has to be done as a matter of course. If there is no gap, presumably if we're still councillors in 50 years' time, we've got a lovely bonus coming because everything's been paid off, and then we can really sell them for their value. So we paid off the 50 million we owe on it, so we're going to sell it for 50 million, so we're going to have 50 million pound in the bank. Is that sort of correct?
Yeah, that is correct. Yeah, and given the choice, we wouldn't necessarily do it that way round. Although it'd be, a nice position to be in 50 years' time. I think we would still rather have the revenue now, if we had the choice, and use the capital receipt in 50 years' time, than have that revenue tied up today in making the repayment provisions that we have to make. But yes, you're absolutely right. Yeah, that would be the case.
So presumably when we discuss the legacy we give from our children from Baslan, we've got quite a good few quid from your direction.
Thank you, Councillor Murphy. Any other comments? No. Well, yeah. Thank you for that. That's all good stuff. All good to know. That one was for noting as well. So on to skip over item 8, which we did earlier. Item 9 on page 151. Annual corporate risk management update, which I believe is Mike.
I would like to start by making a plea. The next two items are not mine. The Risk and Governance Officer is away on holiday, so I've got the short straw here to present these two items, so I'll just please be kind. So, dealing with the Corporate Risk Management Report. So, the purpose of this report is to provide an overview of the Council's risk management arrangements and activities during 24-25, and to signpost further work to be undertaken during 25-26. This report confirms that the Council has in place a robust risk management framework and that it is working well across the organisation. During 24-25, there's been a significant amount of focus on risk across the organisation, and a lot of work is being carried out by the risk management team to increase the knowledge and awareness of risk. The Council aims to make decisions in an effective and balanced risk-aware manner, taking into account the agreed risk policy, strategy and toolkit. The Council has defined its risk appetite, which is the amount of risk that the Council is willing to accept in order to achieve its objectives. This does not mean the Council cannot take risks outside of these appetites, but when we do, we ensure that we have undertaken due diligence and ensure decisions are made in an informed basis. The aim is to establish boundaries for risk taking and to ensure that risks are accepted or proportionate to the possible rewards. Provider enclosure number 1 is the corporate and significant risks above appetite for information. At enclosure 2, we list the 18 corporate risks. I'd just like to give a bit of information around these corporate risks. Cyber security is currently assessed as a red risk due to the number of external assessments undertaken. With the implementation of recommended improvements, the Council's cyber risk score is expected to improve significantly, aligning more closely with best practice across the UK local authorities. Basildon's devolution and local government reorganisation, risk is rated as red due to the high complexity of managing both processes simultaneously. This includes challenges like securing unanimous council agreement, limited capacity and resources, political disagreements and financial uncertainties. These factors significantly increase the risks of delays, governance issues and failure to deliver expected outcomes. There are a number of corporate risks that are amber and impact the Council's governance and arrangements. These are highlighted within the Council's annual governance statement as an area for further development. In terms of operational risk management, the insurance service arranges insurance cover for the Council under 24 separate insurance policies covering public liability, motor and property risks. The insurance service drives forward risk projects specifically requested by the Council's insurers. This involves working closely with related services to improve and mitigate risks relating to motor vehicle accidents and damage to property by trees. In addition, the Audit and Risk Working Group reviews corporate risks and brings challenge to these risks. The remit of the group also includes reviewing the findings from audit reports, especially where limited outcomes were recorded or where there has been limited progress in implementing recommendation. It is proposed that a programme of meetings be set for 25-26. Other risk-related matters may be identified by members of the group and will be considered as part of the future programme of reviews. I'm quite happy to take any questions. I say.
Councillor Hurdley.
Yeah. Thank you for that report. I appreciate it's a second-hand report from someone else, but given that the officer's on leave, you said, can I suggest that we go to the recommendations, note the report, and get those working groups set up as quickly as possible, particularly to investigate the red risks that have been highlighted? I don't think it would be productive to question this officer on someone else's report.
If anybody's got any burning questions, then I'm sure Mike will be happy to answer them.
I'm quite happy to take questions. If there's anything I can't answer, we'll have to come back to you.
Yeah,
but that sounds like a good suggestion.
Yeah, just on the working groups before we continue, Councillor Myers, I'll bring that up at the end during the draft working programme, so we can get those in the process of getting set up. Councillor Myers.
Yeah, thank you, Chair. I mean, really just to say that the report itself, it highlights where the risks are, the red, amber and green, and where we are, and I think it is important that we do more deep dives into these in the working groups rather than going through from here. I think a full report on each of the red ones and what the issues are surrounding those in terms of audit and governance and where we are is more important. And then of course once we have that working group set up and the work that's been done on that, then of course we all know what we're talking about when we're back here for the next quarterly meeting to discuss then.
Thank you. Any other members got any questions on the report? No, just from me, Mike. On the devolution and local government reorganisation one, I mean, is it currently in red simply because we're so early on in the process that we don't know the risks entirely yet, and that we would expect it to naturally improve, you know, as the process becomes more clear?
Yeah, that's correct. Yeah, there's a number of unknowns at this point in time. So basically, it's a complex issue. So we're highlighting it could possibly be a red risk, but as time unfolds, the risk rating may change. Yes, it's just a number of uncertainties at that moment. So yeah, it's scored in that manner.
Yeah, brilliant. Thanks. We've got no other comments on this one then. As Councillor Headley pointed out, this one's for noting, so thank you, and we'll move on to item number 10, which is annual governance statement, which again is another report that Mike will be presenting on behalf of Sarah.
Yeah, we apologise. This wouldn't normally happen, so I can only apologise. So in terms of the annual governance statement, all local authorities are required to maintain a local code of corporate governance and to produce, in line with proper practice and guidance, an annual governance statement. The AGS is an objective appraisal of our governance framework and shows that we have adequate arrangements which continue to be regarded fit for purpose and comply with the Council's local code of corporate governance, and shows that we have met our legal and statutory obligations to our residents. Whilst the Council has good foundations in relation to its governance arrangements, the Council recognises that further work is required to embed and strengthen its governance culture to ensure that both members and officers understand the value and importance governance plays within local government. The AGS must be endorsed by the Audit and Risk Committee prior to its certification by the Leader of the Council and the Chief Executive, and published alongside the Council's Statement of Accounts. The purpose of the Council's local code of corporate governance is to set out the arrangements under 7 core principles. The Audit and Risk Committee considered and approved the local code for 24-25 on the 10th of July 2024. The local code has been reviewed to ensure that the Council's governance arrangements and commitments remain fit for purpose and that there are no significant changes proposed. The local code for 25-26 is attached at enclosure 1 for members' endorsement. The purpose of the AGS is to report publicly on the extent to which the Council complies with its own local code of corporate governance. The AGS incorporates the continuous review of the effectiveness of our governance arrangements throughout 24-25. It identifies those areas where we can and will do more to ensure that we have effective governance arrangements that enable the organisation to deliver on its commitment to deliver high quality services whilst driving transformation and fostering pride in the borough. The Council recognises that there are governance areas where we wish to enhance our arrangements, ensure that we continue to do the right things in the right way, in line with our values, and to take into account significant changes we face. Detailed action plans are being developed to support those areas where further work is required to enhance, review, or embed arrangements. Action plans will be established to address all areas marked as amber. These action plans will outline the specific tasks, due dates, and responsible officers. Following certification by the Leader of the Council and the Chief Executive, these issues and agreed outcomes will form part of the Council's performance reporting framework, and arrangements will be updated and monitored through the Audit and Risk Committee and the corporate leadership team. The process that was undertaken in preparing the AGS involves discussion with the corporate leadership team and includes the following activities. Service managers are required to provide quarterly service-based statements providing assurance on governance issues. Corporate assurers are also required to provide a corporate opinion on key governance areas. And lastly, assurances are obtained from the Head of Pay Services, the Chief Financial Officer, Section 151, the Monitoring Officer, and the Chief Audit Executive, myself. These assurances are reviewed by the corporate leadership team. Through this robust approach, there is an adequate level of assurance provided in the overall assessment of the Council's governance and arrangements. So in terms of the AGF, we're providing an adequate assurance opinion. So this has a wider remit than myself. So I've provided a limited opinion review of the Council's arrangements, which feeds into the AGS. The AGS considers 37 governance principles. So that's why there's a difference between my opinion and an opinion in the AGS, where we're providing an adequate assurance opinion. There's a wider remit. So just to put that to perspective. So it's not necessarily the case that if I give a limited opinion, the AGS will be limited, because the AGS has got a wider remit. The AGS is attached to enclosure number 2 for consideration and endorsement. In line with the Council and Audit regulations, the AGS will accompany the accounting statements. The AGS has been reviewed by the Chief Executive, and the corporate leadership team have confirmed their satisfaction with its content and expressed confidence that further improvements will be achieved. Thank you very much.
Okay, thank you. Any comments on this one? No. Yeah, I mean, I don't have much to add either. Thank you for the report. I know it's not your specific area, so thanks a lot. And yeah, if we got no comments on that, then thank you very much. We'll move on to item number 11, which is the draft work programme. So yes, let's get that up. So as yeah, I don't need to read out every item on the work programme, but have members got any issues or anything else that they would want to add on to any meetings? No, sounds like we're all happy with it. And then the other thing that we need to discuss in this item is around setting up the working groups, which we're keen to do as quickly as possible. Correct me if I'm wrong, Tina. Is it a minimum of 3 members, and that need to be on the working group?
Yeah, that's correct. It's usually the chair and vice chair and one other.
Brilliant. So yeah, obviously Vice Chair Councillor Palmer isn't here this evening, but yeah, we don't all need to throw our hands up in at the moment to volunteer, but we'll take that offline. So I'll pop an email out with officers to have any volunteers for the final member of that working group, and so we can get started on the important work there. Yeah, Councillor Myers.
That's fine with sort of the 3 members, but just wondering, obviously, if there's a member that feels quite strongly about a particular item, would there be substitutes allowed?
Yes, most certainly, yes.
Yeah, absolutely. We're more than happy to have additional members joining as and when. So if there's no other comments, then we'll close the meeting. Thank you very, very much, everybody, and have a safe journey home.